In day trading land, you're going to hear a lot about low priced and penny stocks. That's all the rage when you start looking to get into trading. But in today's video, I'm going to talk about the fact that you can make money in higher priced stocks as a beginner, even if you have a small account. Hey everyone, lead trainer with StocksToTrade, Tim Bowen here. Everyone always kind of starts out in penny stocks when they're looking to get started day trading and momentum trading. And I was there with you when I got started day trading. It was all these $1 to $5 stocks, the penny stocks they call them. And what I want to talk about today is you don't necessarily have to focus on that price range, especially if you're that part-time trader or that new trader. Maybe you've got a job, you've got school, you got a family, etc. You can't necessarily sit there every day, but yet you want to learn trading and you want to make money. That's ultimately why we all go to the market. So let me just kind of talk about some terms to get us started. But when you hear the term penny stock, while there are stocks that trade for a penny, some stocks even trade for 1/1000th of a penny. There's truly really low price stocks. But typically in most circles, when you hear the term penny stock, it's like a stock that's less than $9, maybe less than $5, and then all the way down to that 1/1000th of a penny. But traditionally, it's kind of that $1 to $9 stock. The single digit stocks are what we talk about as penny stocks. So while they make big moves, they have crazy volatility, and it can really be difficult if you're a new trader to not get consistently stopped out. When you've got a stock that goes from $1 to $6 to $2 in a day, that's great. The volatility is great. There's money to be made there. But if you can't sit at the computer every second, or if you're learning discipline and you're dealing with stopping out at the right time, you can get stopped out over and over and over again in these stocks. And then you'll see this all the time. People say trading penny stocks doesn't work. I don't think there's anything further from the truth, but you will hear that a lot. A lot of people have tried penny stocks and failed. 90% of day traders fail. And I think that one of the reasons that attrition rate is so high is people rush into these low price stocks because you need less buying power. You can trade them with a smaller account, but you haven't built the skills yet. You don't know how to create a trade plan. You don't know how to do that research process, and you don't know how to stop out of a stock. And if you can't take a stop, the worst place to be is trading $1, $2, $3 or 1/1000th of a penny stocks. So what I say as a beginner, start looking for those $10 to $20 stocks. To me, that's really that sweet spot, because these are the companies, and I'm doing air quotes here, that we kind of refer to as a little more real. You'll see established companies that are trading in the $12 to $15 to $20 range, and you can trade these with a small account if you know how to isolate the right ones. The biggest thing we're looking for is these stocks in that price range that have momentum, that have moved big in the past. And you can quickly find that by learning charting techniques, by using StocksToTrade to look at the historical data and find these $10 to $20 stocks that have made big moves in the past. Now, you can use what's called the rule of 10. I don't think I made up this term, but I use it all the time. Basically, instead of trading 1,000 shares of a $1 stock, which many of you might be doing, you can trade 100 shares of a $10 stock. And if you get that 10%, 20% move, you're making the same dollar amount. If you get that 20-cent move on a dollar stock, you're making a couple $100 with the same position size as if you got that $2 move on a $10 stock. And these $10 stocks will go 10 to 12, 10 to 15. Think about it. That's 20% gains. That's 50% gains. And this happens every day in momentum stock land. Basically, what I'm telling you, use the power of StocksToTrade to scan for these stocks higher than $10 and know that you don't have to deal with that crazy volatility of the penny stocks. And this might be a little counterintuitive what you've heard. I say start out trading the higher price stocks, learn those techniques, hone your discipline, hone your skills. Then when you're good at taking a stop, when you're good at taking a profit, when you've refined your process, apply that to the low price stocks. I know it's kind of opposite, to what you might hear a lot, but the nice thing is you won't have those insane, quote unquote, insane moves in the $10 to $15 stocks that frustrate you and make you say trading stocks doesn't work. Remember the rule of 10? Use the StocksToTrade scans to scan for those stocks higher than $10, then apply those skills to the low price stocks. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.